Happy Monday, everybody. I hope you had a great long weekend. Now, with markets being closed on Good Friday, at least markets were quiet one day last week. So, as we do this time each week, let's review the action from last week. Let's preview what this week should bring. Today is April 21st, 2025, and this is your Monday market update. Now, markets began the week on a hopeful note, but quickly succumbed to volatility as trade tension, inflation concerns, and even corporate earnings, they influenced investor sentiment. Here's a day-to-day breakdown. Let's go on that. On Monday, markets kicked off the week with modest gains. News that President Trump would exempt most Chinese electronics from tariffs did help get things started, signaling a potential de-escalation in trade tensions. However, optimism waned mid-morning when the New York Fed survey of consumer expectations indicated a sharp uptick in short-term inflation expectations, reigniting concerns about stagflation. Remember that. Now, despite this, falling treasury yields did provide some support with interest-sensitive stocks like real estate and utilities. They did lead the rally. Dow was up 0.75%, S&P up just over 0.75%, and the Nasdaq was up close to 2/3%. Tuesday's session was marked by more uncertainty. Initial optimism from Canadian tariff relief and potential U.S. auto tariff exemptions was overshadowed by China's announcement of a ban on U.S. aircraft imports and stalled EU-U.S. trade negotiations. Stocks started out okay, but they rolled over in the afternoon as the EU trade reps indicated little progress on the talks. Economic data offered some relief, with the Empire State Manufacturing Index and Canadian CPI showing better than expected results. However, deepening pessimism was evident in sentiment surveys. Bank of America's fund managers survey revealed 82% of respondents expect a weaker global economy, the worst reading in 30 years. Now, do you ever ask yourself what was the question that was asked or how it was asked? Did the outcome that I just mentioned properly report on the actual feeling of those who responded? Don't know. The Dow was down 1/3%, S&P down just under 1/4%, the Nasdaq was down about 1/10%. Volatility surged on Wednesdays as new U.S. restrictions on AI chip exports to China weighed heavily on semiconductor stocks, particularly NVIDIA and AMD. Situation did deteriorate further when Federal Reserve Chair Jerome Powell, speaking in Chicago, acknowledged that the Fed was caught off guard by the scale of Trump's tariffs. Now, he warned that these policies could place the Fed's dual mandate in conflict by increasing inflation and suppressing growth. This admission rattled markets, leading to significant losses across the major indices. As you can imagine, we all have to say we got surprised every now and then. What spooked the market here was that the one person who we expected not to be surprised, the Fed chief, he admitted his surprise. I think that's sort of like hearing the surgeon say oops during a surgery. Not really what you want to hear. The markets reacted in step. The Dow was down 1.75%, S&P 500 down 2.25%, and the Nasdaq was down almost 3%. Thursday's trading was mixed. The Dow fell sharply, primarily due to a 22.5% plunge in United Healthcare Group stocks, following a disappointing earnings report that reduced profit forecast. This single stock decline had an outsized impact on the price-weighted Dow. I've explained the concentration effect in the S&P 500 and the Nasdaq over this past year with the Mag 7. But if you want more information on how this happens in the Dow, please let me know. Just to give you a little bit to start off with, in early trading on Thursday, United Healthcare was single-handedly responsible for slicing more than 762 points off the Dow. Now, since the Dow is weighted by an individual company's share price rather than its entire market value, as the S&P 500 is calculated, every dollar move in any stock in the 129-year-old Dow index moves the Dow up or down 6.15 points. United Healthcare shares tumbled as much as $123.92 on Thursday to $461.12. Now multiply that decline by 6.15. The net effect is a reduction of 762.1 points off the Dow. Now in contrast, the S&P 500 did edge higher, supported by a 14% surge in Eli Lilly's share after positive results from a weight loss drug trial. The Nasdaq Composite slipped slightly after opening higher, with gains in some tech stocks offset by some continued weakness in others. Alphabet, parent of Google, was also down after another judge found them monopolistic. There was more on that over the weekend, and there's certainly more to come on that. The Dow was down 1.33%, S&P was up just one tick, and the Nasdaq was down just one tick. Markets were closed Friday in observance of the Good Friday holiday. Now, for the week, the Dow was down over 2.5%, S&P 500 down 1.5%, the Nasdaq was down 2.5%. Investors will be watching closely this week for further developments in trade negotiations, corporate earnings reports, and economic data releases. I want to give you a preview of those data points, but as almost everybody is saying, this is mostly meaningless since there is no clarity on the tariffs and what that will do to earnings and inflation. It may not be comforting to hear Powell say, I don't know, but can you really blame him? We've brought back the word transitory, for goodness sake. We thought we'd get at least a few years of a break from that one. But uncertainty would be the Webster's financial word of the year, or maybe tariff, with uncertainty a close second. As I mentioned, we'll get big earnings released from high-profile companies like Tesla, Alphabet, Boeing, and Intel. We're also going to get Fed heads, Jefferson, Goolsbee, Musalem, Waller, Kashkari, Harker, Hammock, Barkin, Kugler, and they're all going to be keeping in mind that the next Fed meeting is May 6th and 7th. Do we hear some of these Fed heads test the waters, see how the market's going to react to what they say? We're going to see. We'll even get some eco data, some housing, consumer sentiment, even labor data as normal on Thursday. But as I said, it is my opinion that this noise is all just that, noise. The markets react as reflexes are triggered in the algos, but overall, I think the markets will really only move meaningfully on tariff news. Now, it's important to set the stage a bit here. I think there's a lot to unpack, and here's one man's take on things. That's just mine. First, the market is repricing, and that's important, but not so clear because the repricing must be done with a bunch of the inputs, and those are also unclear. Earnings, interest rates, tariff policy, even government shutdown information, extension of the Trump tax cuts, it all needs to be figured in. What we can see, in my opinion, is that by most measures, as LPL research puts it, the markets are not inexpensive, but the markets are more inexpensive than they were just a few short weeks ago. My thought is that this market is pricing in as much bad news as it can. No end in sight for tariffs, a Fed that may be reluctant to cut as they still fear a Fed policy error, or actually another Fed policy error. If you think that all of these uncertainty and the questions will be answered to the negative, let's talk about defense. If you think, as I do, that all the answers are not going to be on the same side of the ledger, you may see some catalysts come along. Just look at what happened with the 90-day delay announcement, and then even the Japan trade rep meeting and the EU comments. If those clarified at the positive, you may see more things go positive. There are still way too many questions, but depending on your goals and your risk tolerance and your time frame, that will determine what needs to be done with your account. Please be in touch to review this. Just read a great article about a couple who, right after the election, put all of their 401k money out of the stock markets into CDs. Now, call me to get details on this story because it will tell a lot. I will leave the facts to for our calls, but this situation is a great example of the need to identify your goals and not to take blanket advice. For now, we're going to get a full week of trading days this week, so please buckle up. Keep your seatbelt securely fastened. Please keep in touch if you want the facts of that story, another update on what's going on, a review of your goals, or even the risk audit that we've been talking about. I would like to note that as of this morning, the world mourns the passing of Pope Francis, at age of 88. This is another historic day and a sad day. In regard to the markets, I would not expect a reaction in stocks to this sad event. So stay alert, stay nimble, and have a great week.